We've got a video. It's a first today. There's quite a lot happening at Nifty. And I thought rather than trying to show it to you in a series of static slides, this is a first for us. So let's go ahead and cue up that video, please. Fantastic, thanks. So at Cyprium, we're building Australia's next great copper company. And that's the first stage, right? What I'm gonna tell you about today is not only an update on our phase 1 cathode restart, which is what you just saw, but also more about what comes next and how it fits into things. I will be making some forward-looking statements, so you should view those with caution and read the disclaimers herein. One of the things I'm not going to be talking about today is the copper market. So I'd like to, though, briefly say that in every aspect of what we're doing, it is impacting what we're doing. Our choice of partners, our ability to move fast, the money that we can raise, the money that we can make, the grades that we can extract from a just tremendous set of assets and exploration that we can bring in. So copper is one of those strong thematics that is giving us backdrop. So we are Western Australia, brownfield copper, and we have a rapid stage expansion that's underway. Our assets are principally outside of Port Hedland in the Patterson district, and our tenements cover 2,000 square kilometers on the basin margin on the western side of the Patterson district. So we have a lot going on there. This has been continuously explored and updated and mined for 40 years. But principally, our main asset is the Nifty Copper Complex. There, we have surface oxides that are left in the existing heaps that we're mining today, permitted, under construction, starting up production in the third quarter, initial cathode in the third quarter. We have oxides that sit around the old open pit that we haven't pulled into reserve, and we'll talk a little bit more about those today. And then we have a tremendous sulfide resource that sits below the open pit and extends down to the top of the old underground mine there. The other thing that we have is we have a lot and a lot of spent infrastructure. We have probably 75,000 tons of copper processing infrastructure on site, and we're lucky we can both process copper oxides and process copper sulfides through the mill. So part of our challenge to the management team is how do we move rapidly in this copper environment to get as much out of the ground and into the market as we can. Starting on the phase 1 cathode restart, there's 17 million tons sitting above ground, no mining, no yellow gear, no diesel fuel, sitting there waiting to be reclaimed. And basically, we're taking those 17 million tons, we're gonna hit them again with sulfuric acid and put them through a partially refurbished plant. That's the essence of the cathode, phase 1 cathode restart. We're doing this work with fantastic partners. McMahon is handling the site works, Decmill is handling the reconstruction, and then PPM Global, who's one of the hydromet experts here in Australia and used to operate Nifty's SXEW in the past, is working with us on site to commission and operate. And again, as we said, we're about halfway through, okay? We're about halfway through the hours that go into the plants, and we've made a lot of progress on site that you probably saw. And this is all leading up to that third quarter wet commissioning and initial cathode, and then ramp up in production. So what are we doing with the heaps? Okay, what you see behind me in the center, it's a visualization of the heaps. And it goes from 6 on the side closest to me all the way to the earliest pads, pad 1 on the other side. And it's a little bit, the process is a little bit like mowing a lawn. We're turning over the heaps with an excavator and then putting pipes and dripper hoses to put sulfuric acid onto freshly exposed new contact areas. That then goes into a series of pipes and valves and ends up in the cathode plant. And for us, our key target here is to keep about 1.2 million tons of material under irrigation at any one point in time. If we find that right now that matches our plant capacity, so if we find that we're making more copper out of that turned over area, then we would turn down our volume that we want to keep under leach. And if we find that we're making less, then we're going to expand. I think that as we've been in this project, one of the things that's interesting is that we're seeing more ways to get material under irrigation faster. And that means that ultimately we're starting to feel like it's possible that we'll be plant limited and be able to grow our cathode production from what we think today. So that's pretty exciting. This is behind me. You'll see closest to me, you'll see a planned view or a planned picture of the solvent extraction plant. That's basically a big chemistry set with a bunch of tanks and valves that take the pregnant liquor that comes off the heaps and then strips it down, purifies it. And then on the further away from me, you see a planned view of the electrowinning plant. And that's where if you've seen those plates of copper that come up in a big pole, they're made in the electrowinning plant. So we're refurbishing right now all of the common parts of the plant that are required to make it run. But actually, we're only refurbishing a part of the actual operating plants, the mixer settlers and the cell house parts that are highlighted there in green. So what that means is, as we think about expanding cathode production, it's actually about sequentially turning on more of the other operating parts because the guts are already there. So as a shareholder, and I'm a big shareholder, and I hope there's a couple here, that'll be very accretive, particularly in the copper market that we're in. So stepping back, I guess what I'm saying is we expect that over time, our cathode production will grow. One area that we're challenging ourselves is, can we increase that mining rate? It's a question mark. And then what does that do around the plant capacity? There's a couple other areas, though, and we'll dive into this in a second. One is that we have an already permitted ability to go ahead and mine the oxide effectively collar around the old open pit and also extend the pit. And what that is back in 1993 when they started up, the grades that they were trying to put through this plant were much, much higher. And as a result, there's a halo of oxide material and a low-grade stockpile and some plant expansion that we can do that will help drive an increase in oxides. Second, we've been talking a little bit about exploration, and we're excited, and you'll be seeing some announcements about exploration. But again, that translation from when other people were exploring these properties, they were looking for either standalone new mines or much higher grade. And what we're seeing is that the 1 million meters of drilling that we have all around Nifty presents quite a lot of opportunity for us to find new material that might go through this plant. This is a visual of the site. And so phase 1, that kind of orange area those are the existing heaps. We're going to mine that and maybe faster. And then the plant, you can see, is just at the end. The next thing that happens is we're around that oxide collar. And what we're looking at right now is the open pit, that sort of oxide collar would be mined and put onto pad 7. So we would build a new pad, start up the open pit, and stack and agglomerate and then leach the material on pad 7 into an expanded plant. And we're sort of finishing up our studies around what are the economics of that and how would we capitalize that. This is actually one of the things. It's not just cathode for cathode's sake. It's actually that by basically moving these oxide materials and putting and recovering the copper within, we're basically getting paid to pre-strip down to the sulfide. And if you remember on that other slide, we have 750,000 tons of copper in sulfide below this open pit, below this oxide collar. So this is a view of the plant. This plant has a 2.8 million ton a year mill, that the milling and comminution side of it, and then it has a float plant that's 50,000 tons. In fact, its peak production was 61,000 tons in the third year of underground operation. So it's got this big, robust, filter press float thickener area of the plant that can handle a lot of copper because it was coming from the underground, the now abandoned underground in high grade. It only needed a little bit on the mill side to make that work and fill the back end of the plant. So when we looked at this from on a PFS basis, and we're going, oh wait a minute, there's this huge ability to make copper, and therefore and you can mine open pit. You're not really constrained by that. Really, our constraint's the mill. So what we thought about was let's expand the mill to 4.5 million tons, and it kind of matches, the float plant capacity. That's the basis of the PFS that we did, and the work that we've been doing since then is actually really, okay, look, I mean, it's $6 copper, right? We need to get tons out as fast as we can. Let's just start this thing up, put it through, and we can expand later, from cash flow. It'll be better, again, more accretive for shareholders, and speed to market's really important. A couple other things that are worth touching on. About 100 kilometers away is Maroochydore. That same process I was talking about back in the day when people were working it. There's a lot of I can't remember the off the top of my head, but I think it's hundreds of thousands of meters of drill holes here. And when it was drilled in the past, people were really looking at it going, can I find 1%, 2%, 3% copper? That's not what this is. It's a large, low-grade deposit and very large. We're talking 360 million tons large at 0.5%. So it's big, but it's low-grade and it's remote. Thank you. And that sits in our portfolio, and we're spending more time thinking about, can we bring that to light? And then we talked about the exploration. Again, there are these hits that just sit there in this surface or areas where you see the surface geochem just popping, and you look at the drill holes and you think, wow, this is going to be an immediate add-on to our program, maybe on the oxide, maybe on the sulfide, maybe on both. So as we're pulling through and looking at this data, we can continue to see how this grows. So what does that look like in the end for us? Again, I'd go back to that beginning. We have 75,000 tons of productive capacity across those two plants. And what we're looking at, just like we did with this phase 1, is starting small and just creating more and more phase development to start to open up into that open pit, get the oxides up and going, and then get the mill back up, and have that turn on, and then ultimately expand it to see how much of it we can fill from our portfolio of resources. It's a really exciting time at Nifty. There's a lot going on. We're focused on delivering that first project, and at that halfway point, you can really see it coming together on site. Our team is growing. Our capacity is increasing. Today, we're sitting at about a $200 million market cap with $100 million of cash on hand, thanks to the shareholders in the room that have supported us on this journey, and we look to our growth in front of us. Thank you.